Hello there and welcome to the Value of Everything. Just going to go through a few crypto things today. So just looking at the chart, obviously we've had this incredible climb up to the peaks of about 17,000 US dollars. Or there you go, 19, and then we've collapsed all the way down to around about 6,000, but there is the incline that's happening now. So, interesting times, and I will get into all of that very shortly because, as you can't quite tell it on this chart, I don't think it goes back too far enough. Can we go back a little bit further? There we are. If it's all a bit squashed down now, but as you go back further and further, you can see that there's been some meteoric rises and crashes all the way throughout the history of Bitcoin and the blockchain. This also additionally applies to the altcoins as well, but they happen to incline and collapse on a far greater scale just purely because of their low volumes in comparison to Bitcoin. Now, I'll just go through a couple of little news articles. In the Wall Street Journal, we've noticed that the South Korean cryptocurrency regulator has been found dead. Now, if you've been looking at the news recently, Bitcoin has been crashing on how the regulators are cracking down on blockchain and potentially, regulating it out of existence in the worst type of sense. But it's very weird how this thing happens. I mean, people get found dead at home is a very rare thing to happen. Regardless of how much we're reading into this, I think it's a cause for concern, but obviously I'm a little bit more on the crypto positive camp, but it's strange how obviously money laundering comes into the class of what cryptos are, because it's it's a method whereby you can disguise your money to transfer and launder to different places. You can the only thing that is a little bit difficult to do is turning bad money into good money, washing it through the system, because you still, even though you can hide the input source, you can't hide the output source when you convert back into a US dollar amount or Aussie dollar or sterling amount. So it looks like obviously throughout the history of Bitcoin that there has been some kind of thing that's happened in the background whereby all the red alarms which would siren off for money laundering and obviously counterfeit of money or something that's a fraudulent type of money, that's all been sort of hush-hushed, and this seems to be one of the extremities, maybe I'm just purely speculating here, of how cryptos are being allowed to continue. There's obviously a lot of words about the NSA or the CIA or some kind of intelligence agency that who worked in encryption and creating secret messages may have been behind the creation. But I think it's just interesting just to look at this thing. People may say, yeah, well, he was getting in the way, it's good that he's out of the way, but it's very, you don't want dead people, do you? Regardless of whose side they're on. So I think that's just a marker in crypto history that I think needs to be recognized. Then next up, I just want to emphasize one of these interesting points that always comes up in terms of Bitcoin crashes. Now, just going back to where I was with, going back was the wrong way, in fact. Going back to here where I was with Bitcoin. Now, everybody says, oh, we're in a bubble. Well, there was a bubble there. There was a bubble there as well, if you can see it. Now, the comparison gets made against the Tulip Bubble. Now, I think there was one tiny little correction. Say if we was comparing this to the Tulip Bubble, I think I'm going to have to use your imagination here. This little dip here is quite similar to what happens with the Tulip Bubble. Then there was a massive rise, and then it's completely crashed. And the market really never recovered after that point. But it's interesting how Bitcoin always gets compared against the Tulip Bubble, some bubble that was done ages and ages ago, let alone there's been hundreds of bubbles which have been created by bankers fairly recently. We can only look back to the King Kong of bubbles, which was created in 2007, or up to 2007, 2008. But the news articles will always talk about how tulip mania, not the financial industry, could spark, has created economic collapses in the past. So, just be very wary of that. We're always pointing to some kind of old historic point without looking at every single other bubble that's been created in the past. If I'm going to go into this a little bit, there is a big distinction between the Tulip Bubble and what we could call the crypto bubble. And the main one with the Tulip Bubble is really the debt financing, which is one incredible point of it, where that people were using more and more debt. They were, I don't know, maybe they were mortgaging their houses, or they were getting some kind of Ponzi financing to increase the amount of leverage. Maybe we've got a chart on this article. Usually they provide a chart. No, they haven't provided a chart on this one. Let's see if I can create one. Tulip Bubble. Tulip Mania chart. I'll get a comparison for you. There we go. I'm sure this will work. Oh no. There we go. There's a chart for you. So yeah, you can see that little sell-off point there, and then you've got the big mania phase, and then the blow-off phase, and then the return to the mean. Now, you could say that there's a very similar point, but the Tulip Bubble never really got into an extra point here where there was another increase of the market. It was never on a continuation of a bull run. It was just a mania that collapsed, and that was the end of it. Whereas when we go back to the blockchain, there has been a series of, let's just call it manias, and then they've collapsed, and then they've continued on into its bull run. Now we have to ask the question, why is this still happening? Now, one of the things that is similar is that there has been a lot of credit that has been created, or debt financing, which has enabled this massive leverage point. And then what gets exacerbated after that is people noticing that they are in a lost territory. They get stop loss. They need to get out of their position desperately because they can't handle the loss. They're not buy and holders. And then they collapse out of that position. They have to sell in an absolute desperation. And then until everybody not everybody, but the majority of people that were in very weak positions, leveraged up stop loss option positions, are flushed out of the market, it returns to the mean, and then just the general people that buy into the crypto continues on its cycle. Now, the one thing that's interesting about cryptos is that it doesn't necessarily matter, but as it's just money, what type of position it's in, whether it's at the 1500 or the 800 point here, if it's a means of exchange and it's money, and obviously people want to get into it. Obviously, the money's getting scarcer over time as people get into it. So therefore, there is that general all goods deflate in comparison to the blockchain. But there is no necessary need for. There's no sustainable point for Bitcoin. So, for example, say if we look at things like housing markets. Now, you can increase the bubble so much, but then there's a certain point where it becomes too expensive. Mortgages used to be like a 5-year term or a 10-year term. Now they turned into 30-year terms. And it's really like a point where things become so unsustainable. Everyone's buying $1 million houses over in Australia. Mainly investors, but they're slowly getting flushed out of the market now because they notice that they can't afford to continue and make a profit from making a sale and getting the capital gains. But this is actually let's say a product which is ever going to get to a non-sustainable point because it's money in itself. The only thing that you really would like with money is it to obviously be able to have increased purchasing power over time. This is why one thing about US dollars or sterling is that all goods inflate and your purchasing power gets weaker over time. And that's why gold and silver is also a very good thing to have, although it's not quite as useful in terms of transactions and transacting people in e-commerce, but it does have that ability not to be inflated away. So there is definite distinctions in terms of Bitcoin and the Tulip Mania. And now obviously what we're seeing is that there's been a crackdown on people finding financing to purchase cryptos, which actually helps the sustainability of the product. Let's call it a product now. I mean, it's really it's crypto, but I think obviously people are always going to find ways to get credit. They can go to loan sharks, they can find people that they can borrow from, and then they can, I don't know, do transfers on balances between credit cards and extract cash out of it to still purchase into cryptos. So there's still means and ways to leverage yourself. It doesn't necessarily mean you can get a loan out, turn it into cash, and then put it into crypto. So it doesn't necessarily mean that it's going to halt everything, but direct credit card to crypto is preventing that continuation of the bubble in an easy way, but there's still going to be ways around that bubble, but it improves the sustainability of cryptos as things like this happen, and yet we have some kind of recovery which is occurring. Let's look at a shorter time frame, which is happening here. Now, the other thing about cryptos is that it's not necessarily a money, it's also a political philosophy. People, if you look at throughout time, people have been oppressed in terms of being slaves, being beholden to a ruler, a king or a president or whoever, and officials that work on behalf of them that require tax, and they don't give too much back in return for society. So there is a massive libertarian movement behind removing this part of tax and really taking away any of the middlemen that impoverish people, the people that will get you working, and all of the work effort that you put into making things return, and then you get the return back, and they have squandered about half of all the work that you've done, probably even more so nowadays anyway. So removing that middleman, you putting money into your account, not to some custodian that's potentially being irresponsible with your money. You don't necessarily know. It's just some giant multinational corporation who has got some legal terms which are going to be bailed out by the governments, and all these legal terms are fairly loosely worded, so that your deposits may not even be protected. So just remember that there is a whole political philosophy behind cryptos, which is what the essential thing lies behind, not necessarily all about this get rich quick scheme. So the Tulip, even though it is a product, it looks lovely in your window. It's kind of like you could say it's kind of like a gold where you wear jewelry on yourself, but it's something that's perishable but lasts a short time, and you could put it in your window and people think that's a pleasant thing to look at. It didn't have the full political philosophy behind it of freeing humanity. So just remember that thing in the background. There's a whole impetus there behind it. And obviously the way that people can see it is that every time fiat currency is created, there is a debt burden put upon someone else. Cryptos do not need to create a debtor when they come into existence. Obviously, with the fiat connection in the background, obviously there is some kind of debtor potentially, but maybe even in mining or something, there isn't necessarily any kind of debtor that's been created for it to be put into existence. So there isn't necessarily, the compounding interest, the ability to extract wealth and bring to the top whilst impoverishing people with ever exorbitant debt. So I'm going to leave you with those thoughts. I think we're in for an interesting time with cryptos as time progresses, and we see that this system is rebooting itself, it's recovering. People obviously are not going to think too much about the political philosophy behind it, but they are going to notice that the US dollar is they don't even think this, but they think this is a fantastic way to buy and hold now, probably because they've seen people being burned in the background. And just wait and see what happens with cryptos, because I think most people understand that the US dollar has going to have the longest legs in the world. Well, most people who are financially clued up are not going to see that the US dollar is going to be the kingpin forever. The oil pegging, the rise of China. There is definitely a decline in the US dollar, and that's going to have a negative impact versus cryptos. People also say that the crypto isn't necessarily backed by anything. There is obviously a computational mathematical what are we saying? The cryptographic code to crack, whereby you announce your version of the blockchain to the network. That requires a certain level of power, and the power to a crypto level, even if you really create this massive factory, is going to still be around about $2,000. So there is a energy source required to put that currency into existence, whereas a banker doesn't necessarily need to do much other than type and get you to sign a few things, and you're away. So just recall those things. Would you prefer your money backed up by a mathematical algorithm, or would you prefer your money backed up by the power of the gun or the state? Just another couple of things to note is obviously the debt markets are getting very spooked out about the pullbacks of quantitative easing. So QE is being reduced, and it's happening all over the world, and I think this is going to be interesting times because people obviously, bond vigilantes are thinking to themselves, why should I pay so much for a bond? The governments themselves or the central banks have been paying for these bonds just to keep the costs down, but now they are reducing the exposure on their balance sheets. It's going to be interesting times for the bond market and debt markets as well. They're going to demand much higher interest rates, and that is going to crack down on the debt burden. And if you think about all of the corporations which are doing buybacks and everything else, there will be some interesting fallouts eventually in terms of what is happening in our economic world. And just to note, obviously when there was that little flash crash for one day, Bitcoin did go down with it, but it'll be an interesting time to see if there's a divergence between stock markets and cryptos. If there is a divergence there, then maybe we are seeing a new paradigm whereby not necessarily the flight to safety is US dollar treasury bonds, but the flight to safety is cryptos. Not to say that this will happen, but it's just things to think about. Do your own research as always, and I shall be around for more.